We have all heard about headlines about companies adopting Bitcoin, whether it's MicroStrategy, Tesla, or others. But what does that actually mean? Well, it's all about corporate treasuries. But what exactly is a corporate treasury? And why are companies adding Bitcoin to theirs? So, a corporate treasury is the financial heart of a company. It manages cash, investments, risk, and financing. Typically, a corporate treasury's role is to ensure the company has enough liquidity, protect it from financial risk like currency fluctuations or interest rate change, and optimize returns on excess funds. Now, imagine a company's treasury holding Bitcoin as part of its financial reserves. This isn't about using Bitcoin for day-to-day transactions. Instead, companies like MicroStrategy are holding Bitcoin as a long-term store of value, protecting their assets from inflation and the devaluation of fiat currencies. MicroStrategy led the charge, and they are not alone. Other companies have also embraced Bitcoin in their treasury strategies. Let's start with MicroStrategy itself. Known as the proxy for Bitcoin, MicroStrategy has strategically positioned itself as the largest corporate Bitcoin holder with 386,700 Bitcoins. More examples are companies like Semler Scientific, which is a US-based company that develops, manufactures, and sells products and services to help healthcare providers evaluate and treat chronic disease. Has also embraced Bitcoin as part of its treasury strategy, holding around 5,000 BTC to hedge against inflation and increase its financial flexibility. Next on the list is Metaplanet. Metaplanet, a Japanese investment firm often referred to as Asia's MicroStrategy, views Bitcoin as a future-proof asset. The company holds approximately 2,000 BTC to enhance its financial stability and diversify its reserves. Next is Jiva Technologies. Jiva Technologies, a Canada-based wellness and plant-based e-commerce firm, has recently joined the rank of companies embracing Bitcoin as part of their treasury strategy. Following the approval of its board of directors, Jiva Technologies allocated up to $1 million for Bitcoin investments, marking a bold move into the world of digital assets. Lastly, who doesn't know Marathon Digital? Marathon Digital Holdings, a digital asset technology company that mines cryptocurrencies and develops blockchain technology, currently owns 33,875 Bitcoins as of November 25, 2024. These companies see Bitcoin as a way to preserve value and potentially increase their wealth in the long run. Why are companies adopting Bitcoin as part of their treasury? Let's look at the rewards. Hedge against inflation. Bitcoin's fixed supply makes it a powerful hedge against the eroding value of fiat currencies. Store of value. As Bitcoin gains adoption, its value has increased significantly, providing massive returns for early adopters. Liquidity. Unlike traditional assets, Bitcoin can be accessed and liquidated at any time, offering companies quick access to funds during times of need. Brand equity. Being known as a forward-thinking company embracing cryptocurrency can increase brand recognition and attract investors. Let's hear from Mr. Matthew Dixon, CEO and founder of Evi.io, as he explains why more companies are choosing to stack Bitcoin in their holdings.
So Bitcoin has been nothing short of astounding. So we grew from virtually zero in 2009 when Bitcoin was initially created, and we've grown rapidly to 69,000 during what I call the retail phase of adoption. So that 69,000 was then followed by a sharp pullback to the FTX low of around $15,500. And then from there, the Bitcoin fortunes transformed completely. So this was due to the institutional phase of adoption. So not only have we seen the ETF at the beginning of this year, which meant the floodgates opened really for institutional adoption. So we see institutions everywhere now stocking up with Bitcoin. There's only a very limited supply of Bitcoin, 21 million will only ever be in existence. And so the institutions are flocking to get their holding of Bitcoin. But also we're now hearing of government potentially using Bitcoin as a store of value. So Bitcoin has evolved or transformed from initially a totally speculative asset to now a real store of value, what we call digital gold.
But it's not all upside. There are risks involved in holding Bitcoin as a corporate treasury asset. Volatility risk. Bitcoin's price can swing wildly, which could result in significant fluctuations in a company's balance sheet and earnings. Liquidity risk. If Bitcoin's price drops significantly, a company might be forced to sell at a loss to raise funds, exacerbating market instability. Regulatory risk. The regulatory environment for Bitcoin is still evolving. Shifts in tax laws or crypto regulations could negatively impact a company's Bitcoin holdings. Market perception. Heavy exposure to Bitcoin might worry investors, especially during market downturns when Bitcoin's value drops. So, is holding Bitcoin in a corporate treasury a smart move? For companies like MicroStrategy, Semler Scientific, Metaplanet, and Jiva Technologies, it's proven to be a high-risk, high-reward strategy. But it requires careful planning and management of volatility. Holding Bitcoin has significantly boosted the share price of both MicroStrategy and Metaplanet. For MicroStrategy, its stock price surged over 1,000% as Bitcoin's value increased, transforming the company into a Bitcoin proxy for investors. Similarly, Metaplanet's share price has risen by more than 300% since it adopted Bitcoin as part of its treasury strategy, drawing attention from investors seeking exposure to Bitcoin's growth. Bitcoin has potential to provide massive returns and safeguard against inflation. But it also comes with risk that must be carefully navigated. Companies must weigh these factors against their financial goals and risk appetite. That's on the story for now. This is Ruchi Sharma signing off. Do like, share and subscribe to 3.TV, and for more information stories log on to our website www.3versetv.io or scan the QR code.